We've got Rocco Strauss. He's senior analyst at Arete Research. Rocco, it's good to talk to you. As Brian said last week, I mean, the huge declines that we saw in Snap, we saw it kind of spill over into the other social media stocks too. The big concern, users are growing, but the ad money is not coming in. How much of that do you think spills over into names like Alphabet and Meta this week?
Yeah, I mean, I guess when you look at Snap and what they're most exposed to, you will find that gaming and non-gaming app installs is kind of like the largest category on the platform, potentially making up for roughly 40% or so of ad budgets. You add another 10% for e-commerce, and there is your discretionary spend that's actually fading. While on top, you have all these issues still from like Apple's deprecation of IDFAs around ATT. With respect to like a read across, like potentially on Meta, where it's probably like the easier one. Meta is similar in terms of setup, right? You have roughly 40% e-commerce ads, and maybe another 9, 10, maybe 20% of app installs on top of that. So for Facebook, I would actually say, for Facebook or for Meta, I would actually say you are kind of like facing the perfect storm, right? It is ID issues coming in, which are still not fully lapped. You have recession or whatever kind of recession we are getting weighing on discretionary spend, which you have seen, especially with Snap. You have literally all of the main growth factors for social media networks, which is user growth and time spent growth, which for Meta is kind of like muted, given that they have reached peak penetration in most of the markets. You also have ad loads, which is going backwards based on the shift into Reels. And you have pricing, which is impacted by not only the shift into Reels, which is higher funnel ads, but also by less auction density, given that a lot of the SMEs or D2C brands are not spending to the extent that they have been doing before. And on top of that, with us coming out of the pandemic still, from a lapping perspective, you also have a huge shift from consumer budgets going into products, now kind of like shifting into experiences and services, mainly travel, restaurants, and so on, where Google with search is best positioned to capture those, while Meta has a very low exposure to these kind of like ad units. So long story short, for Meta, all the signals that we're getting so far from the other social media networks, as well as from the other economic activity that we're seeing, is pointing, that it's becoming significantly harder to surprise on top line.
Yeah, well, and I think we saw a similar story with Twitter, where they missed on both the top and bottom lines in terms of Wall Street estimates. Was there anything you gleaned from that company's reports on Friday morning that tells you, rather at the end of last week, about kind of whether or not that's going to be emblematic of what we should expect to see in the other big tech stocks as well?
Yeah, I mean, Twitter is another animal with the deal, with Elon Musk going on or not going on, we will see. But the issue that you have is that you have a demotivated sales force. You have a lot of people leaving the company already. You have brand budgets that do not want to be recognized with what's going on in this, this deal saga here, if you want. And these budgets are fleeing into other platforms. So from a read across perspective, it is hard to actually use Twitter, given that there's so much else going on within the company. But yes, the company is dysfunctional, but has other, there are other reasons for Twitter, which is, management based, which is dysfunctional. You have a huge disconnect between the data that they're gathering on users in the private life, while people are spending most of the time on Twitter in their business life. These things you can't overcome. And in a period where this discretionary spend is, going backwards, you're kind of like hit hardest with that.
Yeah, Rocco, I wonder if we can talk strategy a bit more. Certainly a lot of investors put money behind some of these big names. They have seen, story-specific reasons why we've seen some of these stocks fall. But some of the names you've already mentioned, I mean, they are pretty consumer-facing. In many ways, in this environment, when you think about the macro headwinds, is a company like Microsoft, for example, shielded a little more because they are more B2B? Or, is the investment side on the enterprise side also, a big concern?
Yeah, I mean, I guess you could say like a similar thing about Google, which is significantly broader from what they're doing, right? I mean, you have subscription fees coming in, on some of the consumer-facing, offerings that they have, with YouTube Plus, for example. You have a cloud coming in and other kind of verticals. And for Microsoft, that's the same, right? I mean, you have a much broader footing with advertising not being kind of like their main source of income, if you want. And that potentially shields them, like somewhat further into this, into this recession.
Is there one name that you would say that maybe investors should hang on to? They're looking at their pool of tech names saying, well, these haven't really done great for me over the last few months.
I mean, it depends obviously on your time horizon, right? But the companies that we are looking for are companies that have functional management. So likely not looking for the likes of Twitter, Lyft, Spotify, Shopify. So all these founder-led companies which have, like their own kind of like operational problems. But if you look at like Google, with the cash on the balance sheet, you look at Meta, you look at Snap, obviously, which has a lot of cash and has, like a CEO that knows what he is capable of and what not. That's why he hired Jeremy Gorman. These are the companies that we're looking out for because they have the resources to plow through this recession, further invest in features and user growth. And those are the ones that investors should actually, stick with.
Yeah, some good takeaways there as we look ahead to the week. Arete Research Senior Analyst Rocco Strauss, good to talk to you today.